Hello, my name is Maurice Thomas. I'm the broker at Eagle Eye Realty. The best place to reach me at is at www.myeagleeyerealty.com. Now, the reason why I'm shooting this video is to inform you or to remind you that interest rates are at historically low prices. Now, this is actually rare, mainly because it's at historically low prices. But why is this relevant? The reason why this is relevant is because your monthly payment will be lower and the interest on your loan will be lower, which makes the loan less expensive. Let me give you an example. Say for instance you get a loan for $250,000, a 30-year term with 5% interest rate. Your monthly payment will be $1,655, and the total amount of interest you will pay is $230,000. Now, say for instance you raise the interest rate by 3%. Now, if we raise it by 3%, that's an interest rate of 8%, which means that your monthly payment, typically in California, will be $2,150, and the total amount of interest you will pay is $405,000. Now that's a difference of $175,000 just by a raise of 3%. 3%. So you definitely want to take advantage right now because loans are cheap. Loans are cheap. Now, why would you want to have concern, or not necessarily concern, but why would interest rates rise? One reason is because there's a high demand for loans. So the higher the demand for loans, compared to basic economics, they definitely have to raise the rates to make it a little bit more expensive so they'll have enough money to lend. Another reason is because of inflation. Now, I do actually believe that inflation is going to come, and one of the reasons is because of the amount of money that the government gave out. They actually gave out trillions of dollars. They gave out a lot of money, and all that money, when it seeps into the market, is going to cause inflation. Now, why would you want to control inflation? The main reason is because it makes a lot of things more expensive. Let me give you an example. Say in 2000, how much was gas? It was about $1.25 to $1.50. Now, how much is gas now? It's about $3 to $3.50 in California. Now, that means that the amount of gas is actually more than doubled. But has your income more than doubled? Most likely not. And if that's the case, that means that you can't buy as many items, which is usually bad for the economy and bad for America and bad for business, period. So how does this relate to interest rates? This relates to interest rates because what the Fed does, once inflation hits, they raise interest rates to control inflation. Now let's take this back to the 80s. Back in the 80s, they had high inflation. And the interest rates that they had back then were around 17 to 24%. Now it's a whole lot higher than what we have now at 4 and maybe 5%. Now, I told you what happened when we just raised the interest rate by 3%. Now imagine going all the way up to 17 to 24%. Now, with that extreme, we can actually see that the interest rates could easily double, especially with trillions of dollars in the marketplace. Now, this will make the loans more expensive, and that doesn't make sense for you to wait on a loan when you could possibly get it now. Now, inflation doesn't only affect your monthly payment or the amount of interest you pay, but it could also have an effect on your house. Traditionally, when inflation goes up, so do home prices. Home prices usually follow inflation. They actually call it a hedge against inflation, most homes, because it's a commodity. So you definitely don't want to wait. You want to take advantage now. Now, why are some people waiting? Some of them are waiting for two reasons. One, they can't qualify for a loan. And if you can't qualify for a loan, you want to figure out why. Figure out why you can't qualify for a loan and then alleviate that problem. Number two is a lot of investors or people that can qualify for loans, they're waiting for the market to bottom out. The problem with that is, when are you going to figure out when the market is going to bottom out? The only time you'll know when the market has bottomed out is after home prices have been rising continuously for quarter after quarter, which means that you're not only paying higher interest, but you're going to be paying higher prices on the price of your home. So you definitely want to act now. Now, I hope this was actually helpful for you. Again, my name is Maurice Thomas. I'm with Eagle Eye Realty. Again, the best place to reach me at is at www.myeagleeyerealty.com. That has all my contact information on there. Thank you, and I hope this helped you out. Have a nice day.